Good morning. I am Malik. If you are listening to this, you are standing on the edge of a cliff. Yesterday, Thursday, January 15th, the KSE-100 Index didn't just fall, it surrendered. Closing level, 181,456. Drop, 1,113 points. Days low, 180,783. Do you understand what that low number means? It means we tested the 180,000 psychological floor and we barely bounced. The market is hanging by a thread. The only thing separating us from a free fall to 175,000 is a few hundred points. And today is Friday. In a normal market, Friday is for booking profits. In a war market, with the Malacca Strait blockaded and the Trump administration going scorched earth on Venezuela, Friday is for survival. Look at the volume yesterday, 820 million shares. Retail investors look at that number and say, oh, look at the liquidity, buyers are stepping in. Wrong. When the market drops 1,100 points on 800 million volume, that is not buying, that is distribution. That is the big boys handing off their heavy bags to the retail herd before they exit for the weekend. If you are holding WorldCall, WTL, at 172, or K-Electric at 616 thinking you found a bargain, you are not an investor anymore. You are a hostage. Let's go to the war room. Why is the market bleeding out? It's not just Pakistani politics, it's global physics. Overnight, the situation in the Malacca Strait went from crisis to blockade. China has raised the security level to maximum. Major shipping lines are refusing to transit. What does this mean for your portfolio? It means the diesel that powers our factories and the palm oil that feeds our nation is stuck at sea. And then the Trump administration dropped the hammer. Late last night, the White House announced Maximum Pressure 2.0 on Venezuela. They aren't just sanctioning, they are effectively seizing control of all Venezuela-bound tankers to enforce the new embargo. President Trump is sending a message. If you don't deal with us, you don't sell oil. This removes supply from the market exactly when the Malacca route is closed. Result, oil prices are about to go parabolic. Inflation in Pakistan is about to hit numbers we haven't seen since 2023. If you are holding consumer stocks like Unity Foods, which closed at 20.74 yesterday, you need to exit. How will they import palm oil? At what cost? Their margins are dead. The stock is dead. Get out. I warned you on Wednesday. I warned you on Thursday. Now the trap has snapped. I want you to open your calendar. Look at Section 6 of the Daily Quotations file. Today, Friday, Jan 16, is the book closure start date for the biggest players in the sugar sector. Habib Sugar Mills, HABSM, closed at 76.10, declared 120% dividend. Book closure starts today, Jan 16 to Jan 27. JDW Sugar, JDWS, closed at 882.99, declared 250% dividend. Book closure starts today, Jan 16 to Jan 24. Sind Abadgars, SASML, closed at 214.57, declared 20% dividend. Book closure starts today, Jan 16 to Jan 23. Do you know what this means? If you are still holding these stocks this morning, your capital is frozen. You cannot sell. You are locked in. While the market melts down over the weekend, while Trump tweets about oil prices, while the index threatens to break 180K, your money is stuck in a sugar stock that won't trade. This is why we read the fine print. For everyone else, do not touch the sugar sector. With diesel transport costs spiraling due to the blockade, the export story for sugar is over. The dividends you are chasing will be wiped out by the capital loss. So is everything going to zero? No. In every war, there is an arms dealer. In this financial war, the arms dealer is energy. Look at the divergence yesterday. While the index crashed 1,100 points, Attock Refinery, ATRL, held the line. It closed at 746.44. ODGC closed at 308.20. PPL closed at 249.88. Why are these stocks holding up? Because they are the hedge. If the Malacca situation explodes or Trump announces new tariffs over the weekend, oil prices gap up on Monday. ATRL and ODGC are the only assets in your portfolio that will open green on Monday if the world burns on Sunday. My strategy for energy? Hold. If you have ATRL, keep it. It is your insurance policy. Accumulate. If ODGC dips below 305 today, buy it. The dividend yield plus the currency hedge makes it gold in paper form. Watch. Pakistan Refinery, PRL. It closed at 35.92. It's cheaper but riskier. Stick to the leaders. Now, a word on the banks. Mizan Bank, MEBL, closed at 478.27. Mackenzie Bank closed at 429.20. You might think they are cheap. PE ratios are low. They are not cheap. Foreign funds are selling Pakistani banks to raise liquidity for the Saudi stock exchange opening on February 1st. We are seeing block sales. They are hitting the bid. The volume in Bank of Punjab yesterday was 41 million shares, closed at 40.69. That is a massive churn. This selling pressure will not stop today. It will accelerate. Do not catch a falling knife in the banking sector. Let them bleed. Here is your battle plan for the next 4 hours. 9:30 a.m., the trap open. The market might try to bounce to 181,800. The algorithms will try to lure you in. Action, sell into this strength. If you have systems at 157, sell it. If you have TRG at 75, sell it. Get to cash. 2:30 p.m., the weekend flush. Traders do not want to hold risk over the weekend. Expect heavy selling in the last hour. Do not be the one providing liquidity to them. Be the one sitting on the sidelines with popcorn. The golden rule for today, cash is king. Energy is the queen. Everything else is a pawn. Protect your capital. If 180,000 breaks today, Monday will be a bloodbath. I'm Malik. Stay liquid, stay safe. Good luck. Disclaimer, StockSense is an educational platform. I am an analyst, not a financial advisor. The strategies discussed here are based on data and market speculation. The stock market is a high-risk environment. Do not trade money you cannot afford to lose. Do your own research.